Imagine waking up one morning, pouring yourself a cup of coffee, and then seeing a letter from the IRS sitting on your table. Your heart skips a beat. You open it. It says you owe back taxes. What happens next? Will they take your paycheck, freeze your bank account, or worse, show up at your door? Stick with me, because by the end of this video, you'll know exactly what happens if you owe back taxes, step by step, and how to protect yourself before it's too late. Number 1. What are back taxes? Back taxes are simply taxes you owe from a previous year that you didn't fully pay on time. Maybe you filed your return but couldn't afford the bill. Maybe you didn't file at all. Or maybe the IRS recalculated your income and said you actually owe more than you thought. For example, let's say you worked as a freelancer and made $20,000 in side income but never reported it. A year later, the IRS finds out from the company that paid you. Suddenly, you have back taxes plus penalties. It's not just about forgetting. It's about money the IRS says still belongs to them. Number 2. What happens first? The IRS doesn't kick down your door immediately. They start by sending you a letter. This letter is called a notice and demand for payment. It tells you how much you owe and the deadline to pay. Think of it like a polite but serious reminder. If you act fast here, you can often solve the problem without too much pain. For example, if you owed $1,500 and you pay it within the deadline, that's usually the end of the story. But most people ignore the letter. That's where things get worse. Number 3. Penalties and interest. The IRS loves two things: penalties and interest. If you owe back taxes, you'll get both. The failure to pay penalty is 0.5% of your unpaid taxes every month. On top of that, interest stacks up daily. Let's say you owed $5,000. If you wait a year, you might now owe closer to $5,500 or more because of penalties and interest. It's like a credit card bill that never goes away. The longer you wait, the bigger the snowball gets. And here's the scary part. There's no maximum cap. They'll keep adding until you pay. Number 4. What if you still don't pay? If you keep ignoring the letters, the IRS steps up. First, they file what's called a tax lien. A lien is like a sticky note on your assets saying, "This belongs to the government until you pay us back." Imagine you own a house and you want to sell it. You can't get the full money from the sale because the IRS will take their share first. It also damages your credit score, making it harder to borrow money in the future. A lien is their way of saying, "We're first in line." Number 5. Wage garnishment and bank levies. If a lien isn't enough, the IRS can actually take your money directly. This is called a levy. They can freeze your bank account and drain it. They can also garnish your wages, meaning your employer has to send part of your paycheck to the IRS before you even see it. For example, if you earn $1,000 a week, you might suddenly see only $600 hitting your bank account because $400 goes straight to Uncle Sam. This is where people really start to panic. You don't want to let it get to this stage. Number 6. Can they take your house or car? Yes, in extreme cases, the IRS can seize property. This is rare, but it happens if you owe a lot and refuse to cooperate. They can take your car, your house, even valuable personal items. Think of it as the IRS using your stuff to auction off and cover your tax bill. For example, someone owing hundreds of thousands might wake up to find their vacation home seized. While this doesn't happen to everyone, the possibility is very real, and it's a fear you don't want hanging over your head. Number 7. Statute of limitations. Here's something most beginners don't know. The IRS only has 10 years to collect back taxes. This is called the statute of limitations. After 10 years, if they haven't collected, the debt expires. But here's the catch. Those 10 years pause if you do certain things like declaring bankruptcy or leaving the country for a long time. So, don't think you can just hide and wait it out. The IRS has all the patience in the world, and they know the tricks people try to use. Number 8. Options if you can't pay in full. Now here's the good news. If you can't afford to pay all at once, the IRS actually has programs to help. One option is an installment agreement. This is like a payment plan. If you owe $6,000, you might be allowed to pay $200 a month until it's gone. Another option is something called offer in compromise. That's when the IRS agrees to settle for less than you owe if you truly can't afford it. For example, someone owing $30,000 might settle for $5,000 if the IRS believes they'll never get the full amount. But you have to qualify, and they don't give it easily. Number 9. Innocent spouse relief. What if your spouse caused the tax debt, not you? Maybe they underreported income or hid money, and now both of you are being billed. The IRS has something called innocent spouse relief. It lets you off the hook if you truly didn't know about the mistake. For example, if your husband didn't report his freelance earnings and you had no clue, you can apply to separate yourself from that debt. It's a lifeline for people who got dragged into tax trouble they didn't cause. Number 10. What if you don't file at all? If you think ignoring taxes means the problem disappears, think again. The IRS can file a return on your behalf. It's called a substitute for return. The problem is they won't give you any credits or deductions you qualify for. That means the bill they calculate is usually much higher than if you had filed yourself. For example, maybe you would have gotten a child tax credit or deductions for student loan interest. The IRS won't include those. They'll just hit you with the maximum. So not filing is almost always worse. Number 11. Can you go to jail for back taxes? Most people worry about this. The truth is, you usually don't go to jail just for owing money. The IRS wants your money, not your prison time. Jail happens if you commit fraud, like lying on your return, hiding money offshore, or deliberately not filing for years. Famous people like Wesley Snipes went to prison for tax fraud, not just because they owed. So if your debt is from being broke, you won't likely see jail. But if you try to cheat the system, that's a different story. Number 12. How to fix it fast. The fastest way to stop the IRS from breathing down your neck is to file your returns, even if you can't pay right away. Filing shows good faith. Then, contact the IRS to set up a plan. If you can pay in full, do it. If not, ask about an installment agreement. The key is communication. The IRS is much harsher on people who ignore them. Think of it like dealing with a landlord. If you call and explain, you might work out a deal. If you ghost them, you'll be evicted. Same logic here. Number 13. How back taxes affect your future. Back taxes don't just affect you today. They can ruin your financial future. A lien on your record can prevent you from getting a mortgage. Wage garnishment can crush your budget. And the stress alone can eat away at your peace of mind. Imagine wanting to buy a house in 5 years, but being denied because of an unpaid tax debt. That's the long-term consequence many people don't think about. It's not just about money. It's about freedom. Number 14. Real-life examples. Let's bring this home with some real-life cases. One man owed $15,000 in back taxes. He ignored the letters. The IRS garnished his wages, and he couldn't keep up with rent. Eventually, he had to move in with family. On the flip side, a woman owed $20,000 but immediately set up an installment agreement. She paid $250 a month, avoided liens, and protected her credit score. Same problem, two very different outcomes. Which one would you rather be? Number 15. Can the IRS take your Social Security benefits? Yes, the IRS can legally take part of your Social Security payments if you owe back taxes. This is called the Federal Payment Levy Program. They can take up to 15% of your monthly Social Security check until the debt is paid. For example, if you normally receive $1,200 each month, the IRS could reduce that to about $1,020. This can be especially painful for retirees who depend on every dollar. Number 16. Passport problems. If you owe more than $62,000 in back taxes, the IRS can notify the State Department. That means your passport could be denied or even revoked. Imagine planning a dream trip abroad, only to find out you can't leave the country because of unpaid taxes. This isn't just theory, it happens. For frequent travelers or people working overseas, this can cause chaos in their life and career. Number 17. Impact on small business owners. If you run a small business and owe back taxes, the IRS can go after your business accounts, not just your personal ones. They can also seize assets like equipment or accounts receivable. For example, if clients owe you money, the IRS can redirect those payments straight to them. This makes it nearly impossible to keep your business running until you work out a solution. Number 18. Back taxes and refunds. Here's a surprise for some people. If you're due a refund in the future but still owe back taxes, the IRS will keep your refund and apply it to your debt. For example, maybe you overpaid this year and were expecting $2,000 back. Instead of mailing you that refund, the IRS uses it to reduce what you owe. So don't count on refunds if you still have back taxes outstanding. Number 19. Credit report consequences. While the IRS doesn't directly report your tax debt to credit bureaus, tax liens used to show up on credit reports and could sink your score. Even though they no longer appear on official credit reports, a lien is still a public record. Lenders can see it when you apply for a loan or mortgage. That means back taxes can still block you from getting approved, even if your credit score looks fine. Number 20. Bankruptcy and back taxes. Some people wonder if they can erase tax debt through bankruptcy. The answer is tricky. Some older tax debts can be discharged in bankruptcy if certain conditions are met, but recent taxes usually stick with you. For example, if you filed your taxes more than 3 years ago and meet specific rules, those taxes might be wiped out. But if the taxes are newer, bankruptcy won't save you. This is why it's important to get advice before making big decisions. Number 21. State taxes versus federal taxes. Back taxes don't just happen with the IRS. States can be even tougher. For example, California or New York can suspend your driver's license if you owe state taxes. Some states can even block professional licenses, like if you're a nurse or contractor. Imagine losing your license to work just because of unpaid taxes. State agencies don't play around either, and sometimes they move faster than the IRS. Number 22. How back taxes affect inheritance. If you owe back taxes and you inherit money or property, the IRS can take their share before you get yours. For example, if your parent leaves you $50,000, the IRS can intercept that money to cover your debt. Many people are shocked when they expect a windfall, but see it vanish into the hands of the government. It's another way. Back taxes can rob you of future financial security. Number 23. Back taxes and self-employed workers. Freelancers and gig workers are more likely to owe back taxes because taxes aren't withheld from their paychecks. If you drive for a rideshare company and make $20,000, you have to set aside money for taxes yourself. Many don't, and when tax season comes, they get hit with a big bill. If you don't pay, it quickly becomes back taxes. This is why self-employed people need to be extra careful about setting aside money during the year. So, what happens if you owe back taxes? The IRS starts small with letters, then penalties, then liens, then levies, and in rare cases, even property seizure. But you're not powerless. If you face it head-on, you can stop the snowball before it destroys your life. Now I want to hear from you. If you got a letter tomorrow saying you owed taxes, what would your first move be?